Okay, recording this video after close of trade Friday 8th of October 2010, and we finally closed up at 1160 today. At the end of the week, this actually gives us our end of trend warning signal here on the weekly time frame. Finally got that kind of confirmation, and it happens to be an end of trend warning signal on the 135-minute chart. So normally we get kind of end of trends when they coincide with cyclical turning points. They kind of signal important places where the market might start to reverse. Haven't seen any kind of signals on in terms of volume signals, distribution volume patterns or anything like that, and still not seen our kind of blow off volume in terms of better X trend in order to pull up this volume trailing stop and start to think about a change of trend here. So there's not a lot of other stuff going on to suggest that there's a change happening, but I'm just keeping this in the back of my mind as the trading kind of days develop. Though this week was pretty important. I thought Wednesday's trade going into Thursday's trade, we saw a lot of kind of blow-off activity, and I'm going to show you some of those charts. We kind of reached this kind of a bit of hysteria to do with gold, sinking US dollar, treasury bond bubbles, all that kind of stuff. A lot of that kind of discussion in the marketplace, and I'll put a link up to a previous post that I did back in March to do with market hysteria, and that was when the euro was tanking, and now we've got the reverse. We've got the dollar tanking, US dollar tanking. So just to show you, here's Friday, Thursday, Wednesday on gold chart here, and this is our kind of divergence pattern up at these highs. Professionals up at 1360 kind of taking profits, and we've kind of crept back. We had our kind of exhaustion buying kind of early on in the piece. We had a pullback with exhaustion selling, and that kind of caused this ramp in the market. We're coming back up to test these levels, a lot weaker buying and so on. Let's see where this goes. Bonds, so this is the 30-year bond contract on a tip bar chart. You can see here's Wednesday. Look at that, all those professional blue bars up at that cyclical turning point, and all of these flush signals. The bonds just can't get past this 135 type level. We've had our exhaustion buying and flush signals one after another up here, and then you've got these professional kind of taking profits at the close here, and then today's activity was bearish divergence signals and so on. So just watch out here. This is copper. Copper Wednesday, Thursday kind of peaked here. We'd had our huge run up, kind of exhaustion buying here, came back with exhaustion selling, and we've kind of gone to new highs or just above this high, cracked above this high. But professional kind of blue bars up there, less a little bit of a divergence kind of pattern in terms of less buying going on there. Euro again, Wednesday, Thursday, euro kind of peaked, exhaustion buying, professionals right up at the highs there. A lot of volatility here down here with these kind of patterns going on here. And then crude again, Wednesday, Thursday, here was the kind of peaking crude, professional blue bars up here, bullish divergence right up at 84, and we've kind of slunk back. And we kind of crashed back with a bit of an exhaustion selling signal down here, and so we bounced from there. But look, this was kind of the breakout, and this is these divergence patterns as we're making these this rally kind of continuing. So we'd expect to see some kind of blow off activity that would be a symmetrical pattern that kind of matches the blow off exhaustion buying or rush of climactic buying that got this trend kind of going. And then the the E-mini. So Tuesday, Wednesday, we had kind of climactic buying, came into a significant turning point on the 40,500 tip bar chart. We kind of poked above that yesterday with data release, and then we kind of poked below this kind of 45, 46 type level this morning, another kind of data release. But we've got less and less buying going on. Professionals active right at this cyclical turning point, 1160 and so on. We've had our flush buying at this point here, so let's see where this goes. But I thought this activity on Wednesday, Thursday was really important this week. There was kind of just a lot of market hysteria kind of going on. So not that I've got a lot of kind of distribution volume patterns going on, the E-mini on the highs and so on, so I wouldn't be surprised to see this kind of market crack on, but I'm just wary of this kind of pattern that we saw, first sign of weakness that we've seen in these kind of uptrends for a very long time. And then just looking at my daily charts on the Emini 4500 tip bar chart that I use for trend. This is the trade I took this morning. Short at 55.50, out at 51.50, which, you know, just extraordinary. It was actually the low of the day. I was damn lucky to get out at that. That was actually on my profit target of 4 points, so it kind of took me out. It happens to be a professional blue bar at a cyclical turning point here. You know, this uptrend that we had you know, throughout most of the day today was really set off by the exhaustion selling that we had towards the close on Thursday. And then when we kind of retested with the data release kind of overnight or just before the open, you know, we kind of retested those lows. And then the first time that we kind of came back into that kind of support level here with professionals active at that cyclical turning point, I mean, that's where the rally kind of got going. But I'll just show you kind of on the shorter time frames. This is on the 500 tip bar chart. And for me, this market was kind of rolling over. We'd had kind of bearish divergence signals here, took a break at 55.50 here, kind of rallied up again, but this rally was really, really weak, and I was kind of lucky that the market just kind of slunk away. And it was a very messy kind of decline here, just being led, a couple of amateur Rambo patterns down here. Didn't feel right at all. So, you know, when we had exhaustion selling on the downside on the 1500 and the 500 tip bar chart, you know, I took my chances, you know, luckily got out at my target. So, yeah, it was lucky, but you know, it was a very odd kind of decline here, and the market just kind of took off to the upside. And you can see how that kind of turned out. We had an initial peak at an end of trend warning signal here with professional blue bars. We'd had the exhaustion buying here, whole series of bearish divergence signals here, and the professionals taking profits at this second point here. Then we came back in, Rambo pattern down at the lows here, bullish divergence. You know, the professionals aren't going to just let this just, you know, develop into a downtrend. They're going to take their time about causing a decline. And then we kind of came back into 62 to 64. Look at all those professional blue bars. Not unusual at the end of the week, I must say. An exhaustion buying at those points here, just above the highs. You know, everybody's freaking out that we're going to kind of go to new highs and so on, and they take that opportunity just to get flat for the weekend. And then on the 500 tip bar chart, just to show you again more kind of detail of why I took that short trade, we'd had our exhaustion buying and all these flush signals, and each time we came back up into 57, you can see the first time earlier on in the day, you know, up at 57, all the professionals here came up to test 57 again, all these professional blue bars up here, and then this next time here, flush signals, professionals active at 57, and so yeah, it wasn't a great entry. From my perspective here, a little bit early, not great kind of confirmation and so on, but it did kind of go my way eventually, which is kind of good, and that's where I kind of got out. And you can again see all these kind of amateur down bars, Rambo down bars kind of coming off here. So there we go, that was me done for the week. It was a good week. Monday didn't trade, Tuesday made 5 points, Wednesday made 5. Thursday made 4.5 and Friday made 4, so 18.5 for the week, 4 days trading, so yeah, can't be bad. Anyway, if you want to see the gory details of what I was thinking when I was putting on this trade, that follows shortly. And tomorrow I'm going to do a very quick 3-minute little how-to video on a 3-step process that I use at the beginning of every trading day, setting me up for the day. And so I'll just record that tomorrow and put that out on the website. Hope your trading's going well. Okay, we've just gone short at 11:55.50, and first trade of the day for me, 9:02 a.m. The reason for taking the trade is that you can see on the 1500 tip bar chart, you know, we had all kinds of volatility pre-open with data release, but there was kind of professionals kind of come in at 57, kind of bought it at 53, and then the next time we kind of came back into 57. A lot of amateurs kind of buying this upside break, and then professionals kind of coming in. So at the 57 kind of range, we've had some bearish divergence signals here. On the 500 tip bar chart, we kind of had a flush signal with the professionals kind of on this little rise up here, kind of getting short. And so we've kind of just broken below cyclical low. It's kind of led by the amateurs, not particularly worried about that, although the professionals have come in. So let's see, you know, what happens with this professional blue bar, whether we kind of break below it or above it. Probably should have taken a trade earlier on today, but I was kind of late getting in from surfing, and when I saw what was happening on